Welcome back, and let's shift focus to some of the earnings then, and we will talk about Marico, which has come out with an inline set in Q2FY24, but coming to a surprise, the company has upped its margin guidance for FY24, and as you can see, the stock is also holding itself in green. So let's understand more from the management that what is the outlook going ahead and what are the triggers ahead. With this, let me welcome on board Saugata Gupta, MD and CEO of the company. A very good morning, Mr. Gupta, and thank you so much for your time. Firstly, the company has upped their margin guidance for FY24. So two-part questions. What are the factors that are leading to this particular move? Where do you believe that the margin improvement in FY24 could be 200 basis points versus earlier guidance of 150 basis point? Is that on the back of the softness in the RM cost only? And also, are you confident, how much are you confident about the sustainability of this margin levels going ahead?
You know that our entire focus is to ensure that we maximize volume growth and market share subject to a threshold level of margins. And in the past, we have defined that threshold as anything between 19 to 20. Some of the years it has obviously crossed 20, and this year we are going to deliver a number which could be one of the highest in our history. Now, the combination of two things have happened, I think, as far as margins is concerned. Yes, there is some raw material tailwind. There has been significant efforts which we continue to do to manage costs and obviously spend effectiveness. And we have introduced significant amount of analytics into our spend effectiveness drive. The other thing that has helped is that, we have focused on two things. Namely, first is, as you know, that in the food business, which we had scaled up from 2020, and foods plus digital plus premium personal care today form 20%, which is our almost a significant portion of which is a new age portfolio. Now, there has been considerable effort to improve the gross margin on foods, because if foods is one of the big drivers of growth, we have to get a margin. Although I must say foods makes much more margin than Saffola edible oil, but it still doesn't make as margin as the rest of the portfolio. And therefore, that was something which we worked on. The other one which we worked on in a very focused manner was to improve or reduce the cash burn rate in digital brands, which has also happened. So it's a combination, I would say, of four things rather than this. And we pulled this off despite significant currency devaluation in some of our international markets, which impacted obviously our, as far as translation losses are concerned.
But Mr. Gupta, the cool-off in the RM cost, aren't you looking it to pass on to the customers, the price cuts, which might help to recover volumes for you?
I think we have already taken price drops, okay, in Parachute and and also Saffola, because both are in terms of the price premium sensitive. We are also taking tactical calls in terms of whether we have to do on pricing, consumer offers and all that. As I said, that I think it is a combination of, you are absolutely right that we have to have the right price. I believe that we have a right price of the market in the market. And as you know, that as we enter the off season for copra, it is obviously there will be a slight inching up happening. And therefore, I believe that we now have the right price in the market. Also, I think we have to be also careful in the sense that just pricing might not be the lever right now, because ultimately consumption will happen as the overall system recovers, and we believe that we are seeing a rural recovery which will happen in the second half of the year.
Right. Good morning, Mr. Gupta. This is Shell also joining in the conversation. Let's talk about the rural recovery. Are you witnessing a rural recovery, particularly for your company? If you could provide some update on that particular front. Also, to add to that, if you could tell us how are the demand trends shaping up? We are already in the Q3 period. So how is the demand trend now shaping up for the quarter that we are currently in?
Things had started improving in July. Now in August, there was a kind of insufficient rainfall, and that had led to some kind of uncertainty, and therefore August and at least the first half of September, we had seen again some kind of a demand slump. It's improving right now. Now, if I look at the FMCG consumption, I would say that the fact that most of the people have reported around this 2%, 3%, anytime very low single digit growth. But if you look at the Nielsen numbers, it's indicating that the volume growth is slightly higher. I think it's a combination of 2-3 things. One, obviously, there is rural stress. The second thing, what has happened is a lot of small players have come back and they have, I think, taken now, whether Nielsen, obviously, that pickup for small players who are regional and they may not be the most perfect, that would have happened. And the third thing that has happened is that, as you know, especially in urban GT, given that that there has been revenue pressure, and this is with respect to us and could be for others, I don't know, but with respect to us, costs go up, revenue goes down. So obviously, the credit in the distribution system's ability to do credit in the system reduces. That leads to a slight loss of STR. The STR loss has also happened because in a falling commodity market, people expect price drops and therefore retailers tend to stock less. So in most of our core categories, we have also seen a STR drop in retail. So I think it's a combination of all three. Now, one good sign that has happened this quarter is that for the first time we see offtakes picking up, and offtakes are higher than sales.
You did actually mention over there that you've seen some sort of increased competition, especially from local players. If you could elaborate a bit more on that particular front, if you could tell us from which segments are you seeing this competition actually surface, especially from the domestic players?
No, I think, see, if you look at it, I think some of our growth drivers are from conversion from unbranded to branded or getting share from small players. Now, what happens is that during COVID, obviously, because of supply chain, the lack of supply chain agility and other things, their ability to, I think a lot of small players had either folded up or were less active. As food inflation started and overall inflation started, there is obviously a tendency for consumers to downgrade or titrate in FMCG. That's the time they came up. See, as I would also say that that conversion from unbranded to branded or upgradation stopped. Rather, I think consumers started downgrading. Now, two things will happen. As we believe that now the rural, the thing will become stable. Number two, I think starting now, the copra especially, which contributes significantly to our commodity basket, will start inching up. Some of the raw materials will start inching up. That will ensure that organized players will again become more competitive because we don't immediately pass the costs into the consumers. So I think this phenomena will slowly reduce.
Okay, Mr. Gupta, looking at your internals, what we can spot is Saffola saw another quarter of over 20% revenue decline. Do you see this continuing through the second half of FY24 as well?
So Saffola has a low single-digit volume growth. The reason Saffola is showing a negative revenue growth is because of the fact that if you look at Saffola, and let's take a price of gold, Saffola gold, it had gone up post-Ukraine in last year to $230 a liter. It's today at 160, 155 to 160. So there has been a significant deflation. The deflation is causing the revenue loss and not volume. Volume is positive. Now that anniversarization will slowly start happening in Q3 and Q4. And overall for our business, revenues which have lagged our volume growth, that will get rectified. And I think in Q3, Q4, you will see revenue growth in line with volume growth. And then it will start maybe with a slight increase next year. As we go into Q1, you will get some inflation-led gains.
All right, thank you, Mr. Gupta. We leave it there. Thanks so much for joining us on ET Now to talk about the quarter gone by for Marico, as well as the reasons why actually y'all have gone ahead and upgraded the margin guidance. That was Mr. Saugata Gupta of Marico. But yes, viewers, we will continue taking